Taking a look at today's interest rate markets, let's look at the two-year note futures as they're experiencing some intraday volatility. Two-year note futures basically unchanged now, right around the 102.12 level, but intraday we did see a high of 102.14.5 and a low of 102.08.5. So when you look at the price action today, it's considered an outside day, and what that means is today's high was higher than yesterday's high, and today's low was lower than yesterday's low. So some intraday volatility in the futures markets, and particularly when you look at the shorter dated futures today, in reaction to some of the data points as well as Fed speak. Early in the session, PCE data, the Fed's preferred measure of inflation, coming in pretty much in line with expectations. Enough to provide a tailwind to the futures markets, pushing them up to the intraday highs after the release of those data points. But then as we move through the session, some selling pressure initiated, and we had several Fed speakers today continuing to push back on when rates could be moving lower. And with that, we're seeing, again, the price swings in the shorter dated markets being impacted more so than the longer dated today when you look at the variations between the highs and lows. And so those are a couple of the driving factors today as to why we're seeing, again, the two-year note futures experiencing some intraday volatility. And looking at the yields, currently the two-year note future is unchanged from yesterday at 465 basis points. Now, we did see a high of 470 basis points and a low of 460 basis points. So basically a 10-point range today in the price action before settling out here in the middle of the range. And looking at the yield curve today, buying pressure on the back end of the curve, the 10-year note futures trading higher as well as the 20s and 30s. And the short-dated futures are pretty much unchanged after I said by most parts across the curve, some volatility today in reaction to the data points as well as the Fed speak. But the yield curve is a little bit more inverted today. I should say, yes, inverted as far as the inversion on the back end of the curve is widening today, with the back end being pushed higher and the short dated basically unchanged after what would be considered a fairly volatile intraday market.